Very good afternoon to you traders. It's Mark here from the Day Trading Room. Time is approaching 12:30 in the afternoon London time on a Friday afternoon. And yeah, let's just talk about crude oil from yesterday. Crude oil, very active yesterday. I'm going to talk through some of the things that I got up to on crude oil. First of all, just want to say, that the last few weeks, very quiet on the Dow. I think as I've said in the previous video, not a lot going on. I can count on one hand the amount of trades that I've done on the Dow. Very few, but then I know where my edge lies. I know where my skills are. And my skills are when the market is moving with more aggression. The chop, the slow market may suit some people. I know guys who have strategies to trade that sort of market, working bids and offers, staggering bracket orders across the S&P or whatever it may be. But if you've seen my videos, if you've followed me for a while, you're gonna know it's not my style. I'm very much an order flow reader. That's very much my focus, and I know that's where my biggest edge is. Combine that with the actual setup of the trade, combine that with all the other things, and then focusing on the tape, and that's where my biggest edge is. So I just sit back a little bit. I've been doing other bits and pieces. I've been working on this second program to come out on the site. Been doing other bits and pieces, enjoying some of the weather, and just taking a little bit of a step back, because the Dow has been awfully quiet. We've had occasional opportunity in crude oil past week or so, and obviously we had a few bits and pieces on Apple, but on the whole, generally very quiet. Not a lot to report. However, yesterday we got a little bit more spice in crude oil. I was at the office watching because the Dow the day before had a little bit more action on the Wednesday on the Dow. So I thought that maybe Thursday would be a bit more active. So it's worth going in and looking for some good opportunities. But it actually came from crude oil. I was trading crude oil yesterday. I'm going to run through really what my plan was, how I traded it, what the setup was, how it worked out, what I did right, what I did wrong. I'm going to focus on this one specific trade and really go into some detail on it. Okay, so we've got crude oil here in front of you now. Let me just stretch this out on the 60-minute. Pretty much, by the way, guys, the layout when I'm trading crude oil is almost identical to the YM. I've got the depth of market there. I've got my time and sales there and my filtered time and sales up there. Which, by the way, the free time and sales tool. I'll go to the links section on the site. That's there. Another programmer has kindly coded that up for anyone to download. The links on the site. Okay, so that's the layout. Now, with crude oil, it's a very noisy market. It's a very noisy market, and it's a different way of trading it to the Dow. Very similar in terms of every market's the same in terms of supply and demand, but they've all got their little tiny nuances, their little quirks, and you need to understand the difference between how to trade them. So while the sort of the foundations, the foundation approach is very similar, we're looking at the price position, we're looking at our higher time frames, and then we're drilling down and we're looking at our tape when we're looking to execute the trade when the setup lines up and get the trigger. The stops have got to be a little bit wider sometimes on crude oil depending on the type of setup. You've got to wait a little bit longer. You've got to just take a little take a step back sometimes, and really pinpoint that sweet spot opportunity. Now the danger that with crude oil you've got to be careful of is you don't get caught in noise. Now if I just whip up a 1-minute chart quickly here, we can see. Oh, by the way, I've moved on too quickly. The layout, the time of sales there. I've got a higher time frame chart above and a lower time frame trigger chart below. So this is the 1-minute chart. And just look. Actually, this is today's action. We're not in the most volume period. Here we go. You can see how wicky crude oil is, and so you've got to be prepared for that. If you look through all the charts of crude oil on a 1-minute chart, you can see how many wicks are formed and how choppy it can be, or noisy really is a better word to use for it. So you've got to incorporate that in your trading and accept that you're maybe not going to quite get the sweet spot that you may well have done on the Dow or on the S&P. Low tick on Dow within a few, it's perfectly feasible. Getting a good tape read on it, planning it, waiting for it, hitting it. Often taking less than 6 ticks of heat is the norm. That's perfectly acceptable as a professional trader for you to be doing that. Crude oil, you may not always be as accurate because there's that noise around, because people are playing the spreads, the crack spreads on the refiners' margins. You've got people paying the spread, playing the spread trade across the different months. There's all sorts of different reasons of people are playing and trading crude oil. So that contributes to the noise, and also obviously we know we've got a lot of speculators in there, but we've got a lot of speculators from across the world in there. A lot of people panicking, people trying to hedge, companies trying to hedge, producers trying to hedge. So we've got a lot of participants, and that does create a lot more noise, which we can use it to our advantage because we can make sure that we're on the right end of that noise. And what I mean by that is, when we're looking to take the trade, let's just wait for that little movement towards the direction that we want. So if we're looking for the short, just wait for the wick to the high side to get in. It just gives you that extra 6 to 10 ticks edge, and that's a big edge, because when it rocks back into where it was before, you can then look to take a little bit of risk off if you want, or it just gives you that head start. Rather than chasing it, having to sit through too much heat, just wait for that just little pop, and then to take the trade on that pop. So let's talk about example. It's all very well talking about it. Let's just run through a bit of an example. So yesterday in crude oil, let's look at the 60-minute, because this is really where it all starts, from the 60-minute. Now, we've been stuck in this range, excuse me, and been drawing lines from the top and bottom of the range, and as you know, guys, support and resistance lines are very subjective. Very rarely are they accurate in terms of pinpoint accuracy. You're just looking to draw a line that covers the majority of the area. You're not looking to be clever with it. You're not looking to get it to the exact, because it's not an exact science. It's never going to be exact science. It's just a level of interest, a level to look at, a level to get involved in potentially if you've got your trade set up. So here's my 60-minute chart on crude oil, and this is the sort of lines I've drawn in. I consider that the top of the range, and this to be the bottom of the range. Now, quite entitled to say that that's actually the top of the range, and yes, I would put a dotted line in there to say that's the extreme, and in actual fact, if you look at the high there, 108.72, look at the high there, 108.70, so pretty much on the button. But for me, the real key level was this sort of 107.70, because the amount of times we tagged it, let's get my drawing pen out here, the amount of times we tagged it, it was plentiful. It was a lot of times we tagged it, and we couldn't really push above it, and so I was I'm happy to put my line there. Okay, yes, we've got a few spikes over, but they didn't last, so that's why I drew that line there. And on the downside, pretty much the same thing. One tag, a little cluster there, another tag there. Yes, we've got a little spike under here, forming the ultimate low of the range, but generally it's sort of kept in that sort of range, hasn't it? And what you can also do, which is what I did, and I will show you this on I think a Fibonacci tool's a little bit better way of doing it. Let's stretch that a bit so we can see it clearly. You can start to do this when you've got your levels there. You can start to do stuff like this and go, okay, well, that's the top of the range, that's the bottom of the range. Look at the 50% of the range. Okay, we don't want that covering up, so let's just draw a line out of 50%. Let's delete off the little fib tool, and look, you can see how useful that is to get a little bit of a gauge as to the sentiment of the market. Here in the top half of the range, here in the top half of the range, then we did some work in the bottom half of the range before poking lower. So you start to frame your trade a little bit, frame the market, and understand the concept of where the price position is relative to a lot of things, and that's something I talk a lot about in the new program that's coming up. Just done a big piece on that. But really what I looked at was this. That's the range, that's what I'm looking at. And the day before, we popped under and just did this little wick. We had a lot of wicks going on before, and a little wick here, and all of the time previously, when we put in that wick, we'd push back up, or we'd push the top end of the range. When we started to curl over, and we actually closed at you see that on the drawing pen now. Let's get the drawing pen out. We closed at the lower end of the range. I'm just looking to see what's going to happen the next day, because this is really where we get some interesting action. Because if we then start to roll over, there's going to be a lot of people looking at that 104.30, which is what I had it marked on here, is 104.30, the low of the range. Now this is as well another level to be looked at, and this as well, of course. Those three are big levels. They're pretty close together, but ultimately the 104.30 is the low of that range. If we start it to roll over, then we could get some action, and that's all I'm after, guys, with crude oil. I am after action. I don't mind if it's up, I don't mind if it's down. We've played some great trades to the upside, and I posted that on Twitter, the exit of the little long, literally based on that tape read, and it was up there in the highs, as we pushed up. Tape reading, it's fantastic on crude oil. I'll trade any direction. I don't have a sentiment, but I'll start to create what I call a trading plan. I'll start to develop a plan. So that's really what I thought. I thought, okay, let's see what happens going into the day. I just want to see if that 104.30 holds. I want to see how the market reacts to it. That's what I'm after. How does the price react to a key level? And let's bring the 5 minute up and zoom in on this a little bit. And actually, I'm going to bring the 1 minute because that's really what the time frame I was trading. So what happened? Well, here we go. Look what we got here. We started out at about 2 o'clock, or 2 o'clock. Bit of choppiness, bit of up, bit of down, reason bit of volatility. Then we start to curl over. And then we got a 13 to 15 minute consolidation. Now I'm watching like a hawk this 104.30 level, because I know that everybody's watching it. Everyone's watching it. If you're a crude oil trader, you're watching it yourself, no doubt. When we broke down from actually quite a high point, we're at 104.60, and we took out that 104.30, I am then glued to the screen, absolutely glued, because this is the trade I was looking for. I'm looking for the trade. I'm looking now for a clue from the order flow, from the tape, as to how I'm going to play this trade. Now, in my mind, I'm thinking there's some weakness here. I'm thinking, okay, we've come from quite a way. That's quite a shove down. I'm not ruling out the fact that we could bounce. Of course I'm not ruling that out. And in actual fact, one of the things that I said was, if now we take this out and we do really rock it, we could take out some highs, because that's really what crude oil seems to do a lot of. It takes out lows, it takes out highs, it fakes out. It's a fake out market, and generally when it's not absolutely going crazy, you can play that to your advantage. But anyway, jumping ahead of myself. But what I want to do is I want to make sure I'm aligning myself with whichever the strength of the market is, whether it's strong or weak, whichever the more dominant dominant side is. The aggressive side is what we're looking for. So as we poked under 104.30, I'm watching the tape. Okay, we pull back up here and we just started to pause. There's my first short. Took a first short. As we pushed down, it was 109. I remember it clear as anything. Let me just double check it is. Yeah, 104.09 was the low. And I remember watching on the tape. As we came back down, you've got to watch for those double bottoms on crude, because it loves to do it. It loves to catch you out. So as soon as we get down there and I see that pausing, I'm out of 3/4 of the position, straight out. I'm still on a hold because I still like the setup. I like the fact that it's driven downhill. Pop back up, and I'm now in a nice, powerful position, because I've made some money on the trade, some good money on the trade, not a lot of money, but some good money on the trade. Taking it out as we pop back up. By the time I got out, we're talking about 15, and I was in at double check my logs, but it was around the 30 mark, something like that, maybe the 29. So not a huge profit, but takes them off the table. That's the main thing. Now I've got a little bit of position left, but I still like the action. And crude oil, as I've said, just look at this. I want to show you this, guys, because this is happening time and time again. It's happened all throughout the range, and it will probably continue to happen, because this is the market that we're in. How many times will you get this little pop above before pushing lower or pushing higher, or whatever it may be? That's the nature of crude oil, and we had it earlier. It sort of did a little flag, popped above it, then rolled, and that's really what I was looking for. I had my eye on the 40 level. I don't think we got to. I think we got a little bit. What did we get to? I had my eye on the 40 level. sort of had that in my mind that that's the sort of level I was going to look to add to that short. Remember, I only had a little bit left. I was taking some heat on this now, but on the actual trade itself, I was still okay. But I'm happy to take a little bit of heat on crude oil, as long as it's not, obviously I'm not going to take it in with massive size. I'm going to be straight out, but I don't mind taking a little bit of heat on crude oil. In actual fact, even though it appeared to be a lot of heat, it wasn't really, because it had gone in my direction, come back up. I was probably, less than 10 ticks offside. But I'm in a position now where I'd like to add to the position. And what I'm going to do, my plan is to add to it if we poked to around the 40 level. And then if we carried on pushing up and we got into this sort of area, I'm out of the trade. I'll take the loss and I'll move it on. But we didn't even get to the 40. We actually poked above. We'd stopped at this level quite a few times. We poked above, and I thought this was time to, this was a good opportunity to take a little, to add to this position. So back into the full size position, and I'm now just watching the tape. I'm looking for the rollover, and I started to think, I'm starting to look and go, how long did we consolidate last time? Count the bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 approximately. I may have missed one. Say 13 to 15 minutes consolidation. And then we got a really big shove down. So I start to look again. I said, okay, well, there's the low there. How many bars have we got here? We've got 2, 4, 6, 8, 10, 12, 13. So as we get to that sort of 13th minute, and I'm bearing in mind that I'm now on the full size short, we're about a 10th minute in the consolidation, but I've waited for that little wick up. Now the guys who are chasing this into lows are either sitting with it with a fair bit of heat, like 25 ticks heat, or they've scratched it out and gone on, and I've been caught out by it, and then they're disappointed when it goes lower. So that's why it's very important. You either leave it, miss it, forget about it, or try and catch it on that spike up, as I said earlier. So now I'm at the short position now, and I'm thinking, okay, how am I going to manage this? I'm looking to take it off into new lows. I've got to be careful that it doesn't just go spike, wick, and bang straight back up, because that's crude oil. That's what it'll do to you if you're not on the ball. Very often you will get that spike through, and it's straight back up and literally way back up before you've even had time to get your ticket ready. If you're that slack. So you've got to be prepared for that, and you've got to not be hesitant. And by the way, guys, crude oil is not a market for those. If you're not disciplined, if you're struggling a little bit with your rules, struggling to take the losses or struggling to do anything as part of your trading plan, just stay away from crude. Just until you've got that discipline nailed, because it can do a lot of damage. It can do a lot of damage very quickly if you're on the wrong side of it and you're not just taking that loss and getting out. So as the market rolled down, unfortunately for me, it put this wick in. On the tape, it did look horrible. It looked horrible because we rolled over, we tagged that 104 level, and I remember seeing it on the tape. In fact, I don't even know if it's still there now. Let me just see if I can show you that on the market depth. I think we might have reset actually. But anyway, as we came down, we tagged that 104 level, and it just stopped dead. Bang, just stopped dead, and there was someone just soaking up all that supply coming in. And I was like, is that all I'm going to get out of it? It was 9 was the lowest, an extra 9 ticks, and bang, I took out half the position. And okay, yeah, it's a nice little trade, in from that in from that 104.30 level, that 34 I think I've got, the high being 104.37, so not a bad little read. And as we rolled over, taking half the position off, by the time I hit it though, it just rocked off, so I ended up getting 104.04, 104.05, something like that. Didn't quite get the 104, but anyway, 29, 30 ticks, not so bad. Now I've got half the position. I'm a little bit concerned now because of these little wicks we're getting down here, and the second wick we got. But I sat back, I said, okay, you're in a powerful position now, you've got a little bit of cushion, you've taken some off the table, you took some off the table earlier. Just remember what crude oil is all about. Crude oil is all about that game of messing around at levels, and then it'll just blow, it'll just break, it'll just blow on you, and you're in the position where you've got to wait for that break. And with a little bit of position left, half the position left, I was waiting. We started to form this little triangle where the highs were just not happening, and then the tape just suddenly sped up. We've got that nice speed up in tape, and I'm scaling out. And I just, I just missed that last little flush. My last scale was in the 70s. So where are we? And that's just, that's one of those things. It's not a perfect trade. Trades very rarely are. And if I'd have just held on it, probably I'd say 15-20 seconds, something like that, it would have been in the 40s. It just went poof, just flushed, and that was exactly what I was looking for. But the fact that we kept flushing, and we started in the 70s, and it just started messing around, and I'd already had 68, 103.68 in my head as a sort of level. I don't know why, but it's just sort of what I started to think of, maybe where we could push to. And so when we saw that, I took all the position out. So it's a nice trade. Don't get me wrong, very very pleasant trade. But if I just held on and just played it a little bit cooler, there was another 30 ticks on the table, which is quite a lot. But anyway, that's for me it was a high probability trade. It was a well managed trade. It wasn't a perfect trade. Trades never are. But it was basically seeing the fact that 104.30 had been breached, and that it was being held. It was being held, and just a poke above it just gave me that opportunity to add to that position and take the ride down as the rug was pulled on the buyers. Because don't forget, a lot of people would have been buying at that 104.30 level and just under it, because that's been the way it's been trading for the past several weeks, and they've been getting away with it. But then when it doesn't happen, then that's when you get that flush. And we actually got a second flush, and I wasn't even involved in this. But interestingly, you will probably have noticed now, if you count the candles, we had the 13 to 15 consolidation flush, and the 13 to 15 again. That's 2, 4, 6, 8, 10, 12, 14, 15 candles in the flush. Now, as I said on Twitter, actually, that is really down to, if you're watching the tape during the time, you see how the offers. Now, I know I've got 20 minutes video, guys, but I'll just carry on what I'm talking about. I always seem to make these 20 minutes when I set out to make them shorter. But what I really was watching on the tape, and I know that some of you guys saw this as well, was we were getting a lot of people stepping on the sellers coming onto the offer. Why am I drawing that on there? Let me draw it on the market depth so we can see what's going on. We're getting a lot of people, sellers stepping onto the offer. So we'd have a situation where they'd step onto the offer, say that level. I can't even see that because that's red. Let me just change the colour. Bear with me. Let's have it as a white pen. Okay, so we're getting a lot of people stepping on these offers. Okay, and buyers were hitting them. So there's a lot of this sort of action on the histogram. The volume was increasing, and there was a lot of to and fro, supply demand matching. And what would happen as the market would push up, you'd see a lot of sellers reloading, a lot of algorithms on the offer. You could see that by the histogram increasing, and this going down to maybe 1 or 2 and then reloading, but it wasn't that aggressive. It was almost as if, I don't know how these algorithms are coded, the very specifics of it, but I do know, I've done some research myself on generic how they approach the market, and generally what they will do is they will look to execute a certain amount, but they don't want to move the market too much. So what they generally do is they switch between passive and aggressive. Now, when they're passive, they are sitting on offers. So this is an example of a sell algorithm. They're sitting on offers, and they're looking to work offers. They're looking for buyers to come to them, work offers. Now, if they're not hitting their target in terms of, hey, you know what, it's been 20 minutes, and I should have done, however many contracts, should have sold however many thousand contracts, I haven't done. Now we move to aggressive mode. Does that make sense? So I've got a situation where they're passive and they're sitting on offers. So if you can imagine, that's the depth there, and they're sitting on the offers there, just reloading as the buyers are coming up to hit them. Okay, then they look at the clock and they go, hang on, you know what? Look, that's a nice clock, isn't it? They go, know what? Time's ticking. We need to get some more done. That's when you see them going aggressive, and that's where you see the bids being hit. And if you're watching the tape, you can see that change. It's fantastic to see change. It really is. Even if you're not trading it, I advise you, if you don't want to trade crude oil, you think it's too volatile, too dangerous, I don't blame you, but just watch the tape. Learn so much from it, because those sellers, because they started off being passive, they're not getting the fill, the time's running. I'm making assumptions this is what the algo's done, but I've got some idea of how the algos work. They then go, you know what, we're not getting done quick enough, let's go aggressive. And that's when you see that flush down, bang, they get a load more done, then they start into passive mode again. And that's why you get that 13 to 15 minute consolidation, because they're probably programmed to say, you know what, let's get some selling done, we haven't got enough done, time's ticking, 15 minutes has gone, we should be hitting X target of contracts, we haven't, let's sweep the book, boom, then they sit on the offer again, trying to work offers, reloading. That's why you get that little consolidations, why it doesn't really do this, it doesn't really allow to chug up. It's a flag pattern because they're working offers in between that. Then again, don't get the fill, bang, they go aggressive, start hitting the bids, buyers are backing away from it, you get that little bit of momentum. And if you look on the tape, not very much was traded in that little, let me take that tool off. Not very much was traded in this little area here. It just swept straight through, and then it was sort of got a new level down here. So we've got that 13 minutes, 30 minutes, 30 minutes, 30 minutes, 50 minutes, and then we've got that one more. And now this is where it became interesting. And if you had already noted the fact that we had these little boxes of 13 to 15 minutes, when we got this flush, and then we got a complete different reaction to it. The reaction was push up and hold. And so you can almost say then this is completely different now, and it's third time as well. You know, I like the three rule. There's your second, there's your third. You're pushing your luck if you're going to go for a fourth. And we just consolidated then, and then that's it. That was really my one trade on crude oil. But it was interesting to see, because even later in the day we just slammed through, and there were loads of trade opportunities there, guys. You know, some of you, I'm sure made an awful lot of money on that. But just wanted to point out, the plan and sort of putting things together, so you've got an idea of what you're going to do. Then you're just reinforcing that with the price action and the tape, and just looking for little patterns in the tape, and then sort of wondering, why is that pattern happening? Having a think about, why is that happening? Why possibly is it doing what it's doing? And then you just formulate your plan from there. And also, obviously, most important thing is managing your risk. Any point that trade could have gone against me, scratch it, ditch it, take the loss, move on to the next thing. So we'll see what happens today. Today should be a little bit, should be some good action on crude oil. One thing I want to point out, it's probably too late by the time you watch this video, but if you look at the 103.50 level here on the 60-minute, and actually I'm going to change that to a 5-minute. I'll be very, very quick here because I know I'm almost half an hour. Gosh, it's been holding again this morning so far, and it was the level that we consolidated at quite a lot yesterday. So get your lines on that. Look at that level and almost put that range. That was a little bit of a flush area. If we start getting down into there, things might start getting interesting. So for me, this is my new range now. I'm going to see how the price responds above it and see how the price responds below it. Okay, so that's it, guys. I hope that's been of some use. I know I've waffled on a little bit there, but I just wanted to sort of run through a few bits and pieces that it's been a while since I've done a video as well. So hopefully that's given you some insight of how I think about things, and how I sort of got that most of it right, but the last little bit wrong, and just one good trade is all you need. One good trade is all you need a day. 2 trades, 3 trades is great, but if you're taking just one trade and it's working for you, that's fantastic. But most important is to manage that risk. If that trade had gone against me, I'd have taken the loss, moved on, accepted that risk. Risk management. If you're not managing risk, it damages confidence. It damages. Obviously it takes a dent out of your capital, and especially something like crude oil, which will just take you to the cleaners. There'll be guys who would have just lost a lot of money yesterday on that, buying and just not accepting how far crude oil can actually go, or any market. Anything can happen. That's worth remembering. So good trading, guys. Have a great day today on trading. If you're trading today, enjoy the weekend. Relax at the weekend. Have a bit of downtime. I know we just like to immerse ourselves so much with the markets, but sometimes you just got to switch it all off and just relax and just let your mind empty of the markets. Dedicate some time at the weekend to doing a bit of analysis, a bit of work on your trading plan, whatever it may be, reviewing your trades from the week. Absolutely fine, but don't let it dwell in your head. Don't let it overtake your whole life. And you've got to have some time where you're just draining down a little bit and enjoying some other things in life. So it's worth noting. Okay, guys, good trading. Back with another video next week. Take care.